A bank is a financial institution that accepts deposits from the public and creates a demand deposit while simultaneously making loans. Lending activities can be directly performed by the bank or indirectly through capital markets. Because banks play an important role in financial stability and the economy of a country, most jurisdictions exercise a high degree of regulation over banks. Most countries have institutionalized a system known as fractional reserve banking, under which banks hold liquid assets equal to only a portion of their current liabilities. In addition to other regulations intended to ensure liquidity, banks are generally subject to minimum capital requirements based on an international set of capital standards, the Basel Accords. Banking in its modern sense evolved in the 14th century in the prosperous cities of Renaissance Italy, but in many ways functioned as a continuation of ideas and concepts of credit and lending that had their roots in the ancient world. In the history of banking, a number of banking dynasties, notably the Medicis, the Fuggers, the Welsers, the Berenbergs, and the Rothschilds, have played a central role over many centuries. The oldest existing retail bank is Banca Monte dei Paschi di Siena, while the oldest existing merchant bank is Berenberg Bank. The concept of banking may have begun in ancient Assyria and Babylonia with merchants offering loans of grain as collateral within a barter system. Lenders in ancient Greece and during the Roman Empire added two important innovations. They accepted deposits and changed money. Archaeology from this period in ancient China and India also shows evidence of money lending. The present era of banking can be traced to medieval and early Renaissance Italy, to the rich cities in the center and north like Florence, Lucca, Siena, Venice and Genoa. The Bardi and Peruzzi families dominated banking in 14th century Florence, establishing branches in many other parts of Europe. Giovanni di Bicci the Medici set up one of the most famous Italian banks, the Madichi Bank. In 1397, the Republic of Genoa founded the earliest known state deposit bank, Banco di San Giorgio, in 1407 at Genoa, Italy. Fractional reserve banking and the issue of banknotes emerged in the 17th and 18th centuries. Merchants started to store their gold with the goldsmiths of London, who possessed private vaults, and who charged a fee for that service. In exchange for each deposit of precious metal, the goldsmiths issued receipts certifying the quantity and purity of the metal they held as a bailee. These receipts could not be assigned. Only the original depositor could collect the stored goods. Gradually the goldsmiths began to lend the money out on behalf of the depositor, and promissory notes were issued for money deposited as a loan to the goldsmith. Thus by the 19th century we find n ordinary cases of deposits of money with banking corporations or bankers. The transaction amounts to a mere loan or mutuum, and the bank is to restore not the same money, but an equivalent sum, whenever it is demanded, and, only, when paid into a bank, ceases altogether to be the money of the principal. It is then the money of the banker, who is bound to return an equivalent by paying a similar sum to that deposited with him when he is asked for it. The goldsmith paid interest on deposits, since the promissory notes were payable on demand, and the advances to the goldsmith's customers were repayable over a longer time period. This was an early form of fractional reserve banking. The promissory notes developed into an assignable instrument which could circulate as a safe and convenient form of money backed by the goldsmith's promise to pay, allowing goldsmiths to advance loans with little risk of default. Thus the goldsmiths of London became the forerunners of banking by creating new money based on credit. The Bank of England originated the permanent issue of banknotes in 1695. The Royal Bank of Scotland established the first overdraft facility in 1728. By the beginning of the 19th century, Lubbock's Bank had established a bankers' clearing house in London to allow multiple banks to clear transactions. The Rothschilds pioneered international finance on a large scale, financing the purchase of shares in the Suez Canal for the British government in 1875. The word bank was taken into Middle English from Middle French banc, from Old Italian banca, meaning table, from Old High German bank, Bank, bench, counter. Benches were used as makeshift desks or exchange counters during the Renaissance by Florentine bankers, who used to make their transactions atop desks covered by green tablecloths. The definition of a bank varies from country to country. See the relevant country pages for more information. Under English common law, a banker is defined as a person who carries on the business of banking by conducting current accounts for their customers, paying checks drawn on them,